Hello traders, this is Igor from FX Igor YouTube channel, and today and tomorrow I will present one very simple trading strategy, pivot point reversal strategy. So today we'll talk about this strategy, how we can implement and use in MetaTrader platform, and tomorrow we will see example how we can use this strategy in TradingView. So let me start from the beginning. So what is the pivot point reversal strategy? The pivot point reversal strategy represents a major trend following strategy where traders wait for a short-term reversal and then create a trades around the pivot point price level. For example, if the primary trend is a bullish, then traders wait for a pullback short-term reversal, so some short-term bearish move, and then they make a buy orders around pivot point. Of course, there are a lot of room for experimentation here. For example, you can make a buy or sell order around pivot point level, or you can make around support level, etc., etc. So the most important thing here is just to follow the major concept, not the other things. So we will see 5 steps. The first, we need to define daily pivot point levels. I assume that you already know that. For example, the pivot point price level is equal as a sum of the yesterday low, yesterday high, yesterday close price sum, and then we divide with 3 and we get pivot point level. Of course, we can add support and resistance levels with an additional equation. However, just a small number of traders use that equations. Today we have indicators and we use that indicators on the chart. The next step is to define the primary trend on daily chart. How we can do that? Majority of traders like to use something very simple. For example, if you put on the daily chart exponential moving average to 100, you will get really good estimation of the current trend, bullish or bearish. Of course, the trend lines with combinations with these moving averages can bring you the major trend on the daily chart. Of course, you should create the last several days trend using the trend line. Everything need to match. What we want to follow the major trend, we wanted to follow the last several days trend, and we want to see a little pullback. And when we see that pullback around a pivot point or a sum of the pivot levels, we can generate the trade. To estimate the stop loss and target, we can do it based on the pivot points. Some traders use previous lows and highs, and some traders like to use some formulas using the ATR, average true range, to define the best stop loss and target. In my experience, the best stop loss and target is some previous high or low, because that important levels that we have a proof that price will react. Right now, we are watching the MetaTrader platform chart. We are watching the Euro British Pound. On this MetaTrader chart, I put indicators. Let me a little bit analyze that indicators. There are 2 indicators, pivot points and moving average. I use one very simple, but I like this pivot point indicator. You can download from my website. I have a link just below this video. And as you can see, you can manage everything that you need. You can create the pivot points for daily levels. I usually use either daily, either weekly. So I never use 4 hour, 1 hour, and etc. I just use daily, weekly, and monthly levels. I can use either classical, Camarilla, Woody, Fibonacci retracement. So you can create the levels based on various formulas, but I like this classic way to calculate everything. Show mode today, that means that you want to see only the levels for today. It's important for today. You don't want to see the levels for yesterday, day before, etc. However, if you want to see levels for history levels or pivot points, you can just check and use the historical levels. And the rest is simple, it's just the colors on your chart. And the next is the moving average. You can use exponential to be MT200. You can use the simple. You can see it's a slight little difference. As you can see on the daily chart, the Euro British pound is in bearish move. On the hourly chart, we can see the bearish trend. As you can see, it's a really bearish trend. You can draw this trend line too. It's a bearish trend. So there's no problem with Euro dollar British pound. So on the multi-weeks level, it's in the bearish move. On the last several days, it's a bearish. What we want to see, it's a little bit push up and then go down. So just right now we have example. So yesterday on the May 30, we had a low around the 0.8627, and then we have a bullish move to around 30-35 pips up. And what's happened in the beginning of the new day, we just touch the pivot point price level. So if we on that pivot point price level create a sell order, just there we just put the sell order, or we just put an arrow to see it better just here. Okay, this is the sell order. We can see the beautiful move about 35 pips down. So in next, as you can see, in some 8 hours, we can see the bearish move, and it's a wonderful thing for trading. Of course, we will not make a buy trade because, like I said, we want to follow the major trend. The major trend for the daily chart is a bearish. In several days is a bearish. So we want to sell. We want to follow the major trend. And we want to catch the reversal, several hours reversal trend, just to sell after the bullish pullback. So this is the very simple. However, this strategy has a lot of disadvantages. The biggest disadvantage is, I just watched the gold right now, is that sometimes after they were like this bullish reversal, we can see, for example, here that we have a bullish trend. If we put the 200 like this, so we want to buy, sometimes we don't have a bearish move enough. Sometimes we don't touch a pivot level. Sometimes you don't touch support level. The problem is missing. Sometimes you will miss in few pips to touch the pivot point, because a pivot point price level is just a one price, and price level sometimes it's hard to touch, and I believe more in pivot point area. What that means is my team and I, we calculated pivot point area in our special indicator. As you can see, this is the pivot point rectangle. This pivot point rectangle is automated. We are calculating this the formula is very simple. The formula of pivot point area is that we calculate the pivot point using the simple formula: yesterday high, yesterday low, and yesterday close, summarize, and then we divide with 3, and then we calculate another formula: yesterday high plus yesterday low, divide with 2, and that difference between these two formulas, we create the rectangle from them. You know, we use that from the rectangle, and because of that, when we use the rectangle for that, we have the wider area for the pivot point, for the pivot point area. As you can see, the price touches the pivot point area, not the pivot point. The pivot point is horizontal blue line, and just touch it, and for us it's enough sign that we can enter into trade. And you can see in a lot of examples that, for example, I have a platinum here I have. So we wanted to touch the pivot point on the bullish short reversal and go down, and as you can see, when we put the blue rectangle, it's just touched the pivot point area but didn't touch the pivot point line. So what I want to tell you is, if you use this kind of strategy and use as a manual trader, you should try to sometimes enter into trade, even you don't just trigger the exactly price. You can miss few pips. It's not this is not a rocket science. This is just a trading, and sometimes you can miss few pips if you want to catch the trend, especially if yesterday was a strong bullish or bearish trend, then the strong reversal, and you want to catch that reversal and to catch for the major trend. So in that case, you have a justification. You can, for example, like I said, you can miss the pivot point, either support or pivot point. You can miss the exactly price if you see the strong reversal and the strong bullish or bearish trend. Of course, you should try to trade always following the major trend. In that case, you will increase the winning ratio and the winning probability. However, like I said, in trading, it's nothing 80, 90, 95%, etc. If you risk $1, you try to achieve $1, you need to expect that you will have maybe 55, 56, 57, 54, something like that in percentage. Of course, this is the trading. It's not, like I said, like other YouTube channels talk about, that you can achieve some super excellent indicator on expert advisor to bring your fortune, etc., etc. So there's no such a thing in the trading. You need to have a patient, you be disciplined, and you use simple strategies. You just need to define excellent the stop loss and target, or you need to find some area very good for entry position. So it's not always the price level, can be the area too. And on the end, we need to talk about the stop loss and target. If you want to use a stop loss and target, the best thing is to use some previous low or previous high. For example, here the previous low was here, and I will put this price as a low for the gold. Someone will tell me, oh, but this price is too far. Yes, because gold is volatile, and you need to put a wider stop loss, of course, and the wider target. So it's a normal thing. I always try to find, if I want to buy, I want to find some lowest low in last maybe 24, 48, 7 to 4 hours, or last 7 days low if I want to enter into trade. The same thing is a British pound dollar, because as you can see, it's a bullish trend. So I want to buy, and I want to find some good stop loss. The stop loss here can be this price. Like I said, this price, this is the previous low for my buy trade. So this is the perfect low for me. So this is very simple. You just need to find the stop loss targets based on your preference. My preference is the low is low and high is high, but you can use something else. You can use channels if you like. So it's your choice. It's your choice. So this is it for today, and tomorrow the same story, the same strategy, but we will see how we can do that in the trading view. I wish you a great day, and bye bye.